The bad loan pain only getting worse. Total non-performing assets in the system hit 7 lakh crore rupees in FY15. That's a whopping 20% jump. Private banks fare worse than the state-run banks.
The government finalizes a mega action plan to plug leakages in food, kerosene and fertilizer subsidies. Plans to equip every fair price store with biometric machines linked to Aadhaar cards by the end of this year. That's an exclusive.
Heavy-duty earnings day. Coal India reports fourth quarter numbers in line with estimates. Hindalco's profits sink by over 35%, but the top line is above forecast. ONGC's fourth quarter profits plunged 20% due to higher costs and write-offs.
Tata Motors gears up for life after the Jawaharlal Nehru Urban Renewal Mission, which is on its last leg. Starved of new orders, the company hopes the government will move faster to replace the scheme.
The iconic Royal Enfield will be available in 50 countries starting this summer, says Siddharth Lal of Asha Motors. Opens the first flagship gear store in New Delhi and launches limited edition bikes inspired by dispatch writers of world wars.
The government's Make in India drive has British infrastructure giant JCB rubbing its hands with glee. Wants to make in India its manufacturing hub and the highest revenue contributor in 3 years.
Stock markets in China crash over 6% to the lowest level in 4 months. Fears over tighter requirements of margin financing spooks sentiment. The Wall Street ends a volatile session with minor losses on expiry day.
Gap finally arrives in India. The American brand synonymous with denim sweatshirts opens its first store in Delhi with an exclusive franchise agreement with Arvind Lifestyle.
Mr. Blatter has all the chances to be re-elected. We know that pressure has been exerted on him to ban the World Cup in 2018 in Russia. Sport and politics should be separate.
FIFA boss Sepp Blatter is under immense pressure after 9 officials were arrested yesterday on corruption charges. Calls demanding his resignation have been growing louder, but he's unmoved. Blatter has decided to step ahead to bid for an unprecedented 5th term as president. The turmoil in the world's football governing body is one of our top stories tonight. Good evening and thanks for joining us here on India Business Hour. I'm Nayanthara Rai. Good evening, Surbhi.
Good evening, Nayanthara. I don't know if that's how it really works in top, very, very powerful sports bodies across the world. Everyone in India was crying foul over N. Srinivasan and his conflict of interest in owning an IPL team just a couple of months back. Nothing happened, we know. And now he's the boss of the ICC. And here we have Sepp Blatter saying, that despite all the criticism that he's been facing for years, still all set for a re-election bid for 5th time in a row.
Do 2 wrongs make a right? Are some of these top officials shameless? Something we can talk about later on. Everyone is very opinionated, so let's get straight down to business. We have to get to Sepp Blatter in just a bit. But first up, let's talk about what happened on the Wall Street. Weak earnings and the FNO expiry proved to be a heady cocktail for the bulls, but they withstood the bears' attack as markets ended a volatile session only with minor losses. The Sensex lost over 50 points, clinged onto that 27,500 mark. In fact, it closed just 6 points above that. The Nifty, that defended the 8,300 mark, but after wild swings. Mid-caps marginally underperformed, with that index losing close to 0.5%. What happened on Mint Street, Surbhi?
Not a bad day for the currency in Indira. In fact, it's been quite a decent session for the rupee after it posted a gain of more than 20 paise in trade today, breaking the 3-day losing streak. Heavy dollar selling by exporters has helped the Indian currency post a gain, despite the US dollar gaining against most of the other currencies across the world. Well, moving on, the Indian banking system is being suffocated with the quantum of non-performing assets or bad loans rising at an alarming rate. Data from the Reserve Bank of India shows that NPA category loans in the system, which stood at 5.9 lakh crore rupees last year, now stands at 7.05 lakh crore rupees. CNBC TV 18's Ritu Singh says that an analysis of the top 10 banks in India shows that surprisingly, the problem is much bigger for private sector banks.
The Indian banking system is in dire need of an exorcist if it is to rid itself of the ghost of rising bad loans. But the exorcism needs to go beyond the hope of economic recovery and stricter lending guidelines. Gross NPAs of the top 10 banks have risen by over 14% over the last 1 year. Surprisingly, it's the private sector banks that have actually shown themselves to be less in need of an exorcist. According to data collated by CNBC TV 18, PSU banks ranked among India's 10 biggest banks saw bad loans increase by just 10.9% overall, while the 5 private banks making this list registered a 33.4% jump in bad loans. State Bank of India, which is India's largest lender, actually managed to bring its bad loans down by nearly 8%. And in sharp contrast, India's largest private sector lender ICICI Bank saw a 44% surge in bad loans. Among the PSU banks, Central Bank of India's ability to contain bad loans has been second best, while PNB and Bank of Baroda saw bad loans rise by 30% each. Canara Bank suffered the most, with NPAs jumping a whopping 72% over last year. IndusInd Bank leads the top 5 private sector banks when it comes to effectively dealing with bad loans. Its books have improved by 9.2%, even as peers like HDFC Bank, Axis Bank and Kotak Mahindra have seen bad loans jump by anywhere between 15 to 31%. What's more disturbing is the rising trend of recast loans going bad, especially for the larger banks like ICICI Bank. Data from Corporate Debt Restructuring Cell shows that defaults on restructured loans jumped a staggering 90% in the March quarter to nearly 57,000 crore rupees. Experts blame this on the failure to revive stalled infrastructure projects. It is these projects that have been the worst loan defaulters, and unfortunately, banks have a large exposure to infrastructure. So it may just be a matter of time before the pain becomes more intense. In Mumbai, Ritu Singh.
And while we're speaking of asset quality, Bank of India, which came out with its fourth quarter numbers today, posted a more than a 1% rise in both its gross and net NPAs. Gross NPAs have come in at 5.39% as against 4.07% in the last quarter. While net NPAs have also come in at 3.38%, provisioning has been increased to 2,255 crores as against the 1,547 crores in the same period of last year. And all of this led to the bank posting a loss of 56.1 crore rupees. Compare that to the profit of 557.5 crore rupees in the same period of last year. The stock also taking a beating in trade today, down about 6.5% in trade. And here's the big CNBC TV 18 exclusive. Tonight, the Narendra Modi government all set to roll out a mega plan to plug leakages in food, fertilizer, kerosene subsidies. Each and every fair price shop across the length and breadth of this country is going to be equipped with a biometric facility by the year end. That's the game plan. In fact, one district in every state will start implementing this starting July. Beneficiaries will be linked via the Aadhaar cards. Not just that, a database of all farmers to simplify transfer of fertilizer subsidy is also very much in the making. Sapna Das, who broke that story, now joins us with the exclusive details. Sapna, to say the least, this is highly ambitious. The timeline is ambitious. Forget just what the plan is. But I can't stop wondering how they're going to do this with the Supreme Court ruling that Aadhaar is not necessary, it's not mandatory.
Well, first off on the Aadhaar question, the government here is hopeful that the appeal that has been filed, Supreme Court will have a kind of a better hearing on that front, and probably it would actually go ahead and make the Aadhaar card mandatory. That's the appeal from the government side. The appeal has already gone in, so we have to wait and watch and see what Supreme Court does on that. In the meanwhile, in terms of what is happening in terms of seeding of the Aadhaar card and the linkages that we're talking about, the digitization of database, 18 states across the country have already done so. So this is work in progress. The plan here is to bring all states on board by the end of this calendar year, that is end of December. Also, in the meanwhile, states which are ready, those 18 states which are ready, apart from that, pick up at least one district per state, and probably sometime from July onwards, a pilot will be rolled out in terms of trying to install biometric devices at fair price shops. So this is more of a pilot this is more on a pilot basis, and the government is still trying to test new waters here and see how it really works. The game plan here is to basically try and identify the beneficiaries and bring and pull in a database on that, so they know exactly how much subsidy is going where and where the leakage and how it can be plugged. Not just this, the second pronged approach, especially in terms of the food subsidy, may be a cash transfer for food subsidy. This is also under serious consideration. Formal orders may be on the anvil in the next 2 to 3 weeks. That will give you an idea as to how the formula for this will be decided, how the cash subsidy will be paid, and this will just be an option, as an option to the physical offtake of food grains from PDS. It's not that it could be mandatory or something of that kind. And even when they do it, to test the waters, they will do a pilot scheme. So we have to wait for details on that front. The third element of it, of course, very important again, is fertilizer. Well, here they are not going to disturb the actual fertilizer payment, the subsidy payment to the farmers, but they are attacking the producer subsidy side, in the sense that bringing all the companies to give them a proper database of the actual beneficiaries, how much of sale is happening, what is the consumption like, who are these beneficiaries, what is this farmer database, so that the actual fertilizer subsidy payment down the line can be done in real terms after seeing these numbers and trying to plug leakage, basically. Again, that's the broad method.
The big challenge for the government is going to be not just to have biometric system at every fair price shop, but also mapping of all the Indians when Aadhaar is not mandatory. Let's not forget, Jan Dhan Yojana does not come with a biometric exercise. Thanks a lot, Sapna, for joining us with all of those exclusive details. And while we're speaking of subsidies, former RBI Governor and Chairman of the Expenditure Management Commission, Bimal Jalan, met with the Finance Minister Arun Jaitley earlier in the day. Jalan is confident that the Commission is going to be able to submit the final report by the end of December. He also said the Commission has already made some suggestions to the government on how to manage the fuel and fertilizer subsidies in a more effective manner. Now let's head to earnings corner, and boy, it's been a busy day. We'll begin with ONGC that reported a muted fourth quarter. Despite the upstream company being exempted from bearing any subsidy in the fourth quarter, ONGC's net profit has fallen by more than 900 crore rupees to 3,935 crore as against 4,899 crores clocked in the same period of last year. Some of that can of course be attributed to the low crude oil prices. Despite the total income rising marginally to 21,648 crores, EBITDA is down 17% at 7,619 crores. EBITDA margins have also taken a hit of close to 8% to come in at 35.2%. Subi, you've got more from earnings, Vana.
That's right. Lots of numbers coming in today. Well, it was not just ONGC, two mining majors, Hindalco and NMDC, along with Coal India, also reported their quarterly earnings. Nigel D'Souza now standing by to take us through all those details. Nigel.
Well, let's start off with Hindalco then. Hindalco delivered a bit of a positive surprise on the top line because it beat the highest estimates on the street. The revenue growth was a good 11%. That was driven by the aluminium revenue that came in higher by a good 37% on the back of capacity expansion and capacity utilization, in fact, moving higher. So that's really what explains the top line beat. But in terms of margins, that took a bit of a hit, and that's because the top line jumped up by 11%, but total expenditure jumped up close to around 12%, telling you there was going to be some kind of contraction. So the margins came in at only around 9%. And if you split that up for you, the aluminium EBIT margins, they contracted a good 400 basis points, while the copper margins, in fact, they expanded on the back of better than expected TCRC margins. Fuel and power costs, in fact, should be up for you on the screen. That jumped up a good 50%, telling you that sourcing coal is a bit of a problem for the aluminium operations. The profitability, it crashed a good 30%, but that was primarily because finance costs jumped up close to around 117%, while this time around there was an exceptional loss versus an exceptional gain. But shifting focus then to NMDC. Now the numbers were always expected to be weak. On the top line itself, we did see a cut of close to around 27%, but that was a tad bit better than what the street was estimating. It beat street estimates by nearly around 100 crores on the top line on the back of better volumes. Margins though, they've contracted all the way to around 50%. Remember, just a couple of years ago, the EBITDA margins in fact, were at around 75% plus. So it's contracted all the way to around 50%. A few things that played out, lower realizations would have played out. We did have royalty jumped up by close to around 18%, while we did have even the other expenditure jump up close to around 25%. Profitability as well got cracked. It was down by close to around 30%. It came in at around 1,350 crores. The other income though, it spiked up close to around 37%, protecting the fall in terms of profitability. But let's shift focus and let's look at Coal India then. That was a big stock that we were waiting from the Nifty itself. We did see that the net sales came in higher by close to around 3.5%. That was more or less in line with what the street was estimating. The offtake numbers were always with us. That was higher by close to around 3.7%. And the EBITDA as well did come in line with what the street was estimating. Margins at around 26% were more or less in line with what the street was estimating. But something that needs to be noted over here is that the provisions and write-offs, in fact, that was sharply lower. That was lower by close to 90%, coming in at only around 93 crores. That compares with a number of around 900 crores. And that explains why we did see that marginal EBITDA margin expansion on Coal India. The profitability though, it missed estimates. That's because of a couple of factors here. Yet again, the other income came in lower, while tax rate was higher. On the back of that, the profitability missed. Otherwise, the numbers more or less in line with what the street was estimating.
And both Coal India and NMDC will be in focus tomorrow in trade. Thanks, Nigel, for joining us with that analysis. Let's stay with the energy sector. It's been a trial by fire for Coal and Power Minister Piyush Goyal. In the past 1 year, Goyal has successfully conducted India's first auction of coal blocks, averting a crisis and pushed Coal India to ramp up production to a historic high. Today, in an exclusive interview to CNBC TV18, the Coal Secretary Anil Swarup says the government is going to continue pushing Coal India to meet the 2019 production target of 1 billion tons as it paves the way for a total production of 1.5 billion tons. Sonia Shenoy and Surbhi have that story.
One of the achievements of the Modi government's first year in office is the success of the recent coal auctions. Coal Secretary Anil Swarup says the process of transfer of mines is on track, with 5 mines having started production already.
Taking a bit of time, but I think next 15 days time, the Schedule 2 mines should get going. Schedule 3 obviously will take more time because a lot of groundwork will have to be done in terms of starting mining there. Schedule 2 mines, the mining was already happening, and as I said, 5 are already mining. The rest of them will also start mining in due course.
Enthused by an 11.7% growth in coal production in the first 56 days of FY16, the Coal Secretary says the ministry is now targeting 1.5 billion tons of total coal production by 2020. Coal India's contribution will be 1 billion tons, the stiff target set for it by the minister earlier this year. For the balance 500 million tons, the government is banking on other sources.
We are looking at 550 million tons this year. Going by the rate that we are going, we should be able to achieve that target.
While coal production has improved, non-availability of rakes for the evacuation of coal continues to be a challenge. Swarup says another 200 rakes will be bought by Coal India over the next 4 to 5 years and capacity will be augmented over the next few months.
This will happen over the next 4 to 5 years. We've already entered into an arrangement with railways. Coal India board has already decided to place orders for 30 odd rakes with the railways.
Rake augmentation will mean higher capex for Coal India, and the company will not shy away from making investments.
The overall investment, the capex this year that Coal India has kept is about 6,000 crore.
The government is now exploring a second round of coal reforms, which include the auction of coal linkages for the unregulated sector. Swarup says the coal ministry is in the process of finalizing the modalities for the same.
The entities get cheaper coal from Coal India, and the final product is the price thereof is determined through a market mechanism. So the margin gets taken by the entities that are producing. It is in that context that we are very seriously contemplating as to how we come up with a mechanism through which we can determine the price of coal that gets supplied to these entities in a transparent manner.
The Coal Secretary says, auction aside, his ministry is also working on many more structural changes to improve supply and efficiency. With Sonia Shenoy, Surbhi Upadhyay. Okay, holding on to hope of better coal availability. Moving on, the Jawaharlal Nehru Urban Renewal Mission that was launched by the UPA government is on its last legs. The tenders for buses floated under the scheme are of huge importance to commercial vehicle manufacturers like Tata Motors. Alexander Matthew caught up with Tata Motors' Vernon Noronha and spoke about the status of JNNURM. Here's an excerpt of that conversation.
JNNURM is now in execution phase. All the orders were received up to February last year, and now we are actually delivering those vehicles to the various SPVs. And in a few cities, you can actually see them on the road, and they're really making a big difference. You can see that urban transport has come into a new phase of modernization. We have almost 3,500 orders collected against the Jundrum scheme. We've delivered about 1,500 buses, and the next 2,000 should be delivered by October, November.
At this point, are we seeing a slowness as far as giving out of tenders is concerned, or is there no change whatsoever?
Under the Jundrum scheme, there are no new tenders being floated. But we believe that the government, the MOUD, the Ministry of Urban Development, will shortly announce a new scheme under a new name one of these days, shortly. This is what we believe, and that will take care also of in urban transport.
So give us an update, sir, about the number of orders you have from the government front, including JNNURM. Where is it at right now, and what is the period of delivery that we can look at?
Well, we have in the pure state transport union segment, we have a back order of around 2,000 vehicle chassis, and in Jundrum 2,000. So we have about 4,000 vehicles to deliver. But in the state transports, the tenders are continuously being issued, and we quote for them. So by the end of the year, I think those numbers will improve.
That's Tata Motors and talking about its commercial vehicle business. With the government putting its money and might behind reviving the infrastructure sector, UK headquartered construction company JCB is hoping for better days. The company hopes to make full use of the Make in India campaign and position India as an export hub. Shweta Kothari travelled to JCB's plants in the outskirts of Delhi to get a status check.
The world's third largest construction manufacturing company, JCB, is betting big on India. The company currently operates 5 plants and 600 outlets here and expects India to become the largest revenue contributor by 2018. We caught up with Vipin Sondhi, MD and CEO of JCB India at company's Ballabgarh plant, the biggest backhoe manufacturing facility in the world, to find out more about their expansion plans.
We definitely, and we bet with a tremendous amount of confidence and commitment towards Make in India. We now have set up the 4th and the 5th plant ahead of the Make in India campaign as such during the downturn. So we are betting on the fact that we have an infrastructure deficit, and we can certainly participate and contribute towards not only the India Make in India, but also being a manufacturing hub, and we are exporting to over 50 countries from here. But I'll tell you what we are working very closely with the Government of India, specifically the Department of Heavy Industries, is to create a national capital goods policy. At the end of the day, machinery and architecture will move the Make in India campaign, and we are working very, very closely, and hopefully in 3 or 4 months we should have a national capital goods policy. We've just invested in 2 new plants, and we must fill these plants, but investment has to be looked in a broader context. Overall, JCB has invested about 2,000 crores in India, but investment takes place in product, and we are multiplying the number of product lines. We are multiplying the number of engineers that work in our design center. So all of that actually compositely will address our Make in India commitment to moving ahead. The changes to happen ground, as I said, will take a little bit of time, and I think when the order book really starts moving forward will be in the latter part of this fiscal.
While JCB is optimistic about the reforms undertaken by the BJP government, Sondhi says Make in India is a tough ask, and a full-blown recovery in the economy is still another 12 months away. In Ballabgarh, Shweta Kothari.
Iconic premium motorcycle brand Royal Enfield is cruising faster than it ever has, strengthening its retail presence. The maker of the cult Thunderbird and Bullet motorcycles opened up its flagship gear store in Delhi today. CNBC TV 18's Farah Bukwala-Bora gets you a report on how this retail strategy fits in line with the company's larger growth strategy.
I'm at Royal Enfield's flagship gear store, which was launched in Delhi's Khan Market today. This is the 6th gear outlet to be launched by Royal Enfield and is part of the company's retail strategy to offer a complete motorcycling experience to its customers. Now, this store not only offers limited motorcycle editions, but also riding gear such as helmets, shoes, accessories, as well as jackets. Now, this retail strategy is also an integral part of the company's global expansion push.
What we've done is, at one level, in order to make the motorcycling experience much more fun, it's not just the lovely motorcycles that we make, but it's also really nice gear. So it's performance gear, which is fully armored. It's urban gear, which is good for city riding conditions and all of that. So we've got now a full range of gear, which is for the motorcyclists in India and around the world, and that helps us in that allows us to be in lovely locations like this in Khan Market. So we're able to open a store in the middle of Khan Market because it's primarily a gear store, which is not just for motorcyclists. You can also wear it like, this t-shirt here, you can wear it out. So that's the retail strategy.
You're in the throes of a larger global expansion drive. You're present across 50 countries, as you mentioned. However, if you see your exports, it's barely 2% of the total volumes that you do. What's the larger vision out there? And by 2020, where do you see the mix between domestic and exports? How would that pan out?
Yeah, so we are present in a lot of countries, but the focus now and the new international strategy is on depth. But now we are working our way up. So we've got a lot of things going on in our international markets. We're developing a lot of new motorcycles. We're doing a lot of international distribution and retail. And over the course of the next 5, 7, 10 years, we expect to become a significant player in the middleweight market in all the countries that we enter. So our idea is to, in fact, add to our existing range of motorcycles with 2 new platforms, and they will be middleweight motorcycles.
So with new platforms on the way, massive geographical expansion, the induction of new talent and the bolstering of its R&D capabilities, Royal Enfield is maxing the throttle in an attempt to become the world's leader in the mid-displacement motorcycle space. In New Delhi, Farah Bukwala-Bora.
Well, if leather is not your calling and you're more of a denim person and from New Delhi, this should enthuse you. American clothing brand Gap has arrived in India with over 1,700 stores worldwide. This 45-year-old US retailer plans to open 40 stores in India over the next 5 years. I visited Gap's first outlet in New Delhi to get you the sneak peek.
Gap, the iconic American brand synonymous with denim and sweatshirts, is opening for business in India from the Select City Mall in New Delhi. So keen was the mall to back Gap that it vacated the popular baby store, Mother Care and bookshop Crossword to provide 11,000 square feet of retail space for Gap's India debut. Gap has come to India with an exclusive franchise arrangement with Arvind Lifestyle, which also has joint ventures with Gap's competitors like Calvin Klein, Tommy Hilfiger, and licensing arrangements with brands like Nautica, Arrow, and US Polo.
We believe that our current scope is around 30 to 40 stores. So timeline-wise, it all depends on the quality of the real estate, finding the right location. Even though we know the malls we want to be in today, it's still going to take some time to secure that great real estate that we need for the brand.
The relationship between Arvind and Gap goes back 2 decades and was stitched via exports. Gap is relying on its local partners' knowledge of the market and pricing. Old Navy and Banana Republic, 2 other popular brands of the NYSE-listed Gap Inc., may also enter India via exclusive licensing arrangements with Arvind.
So there's nothing specifically designed for India, but what you will always see is obviously depending on the size of the store. So if you're going to have Fifth Avenue in New York, it's a much larger store. You're going to see a much wider assortment. But in terms of consistency, it's a very globally consistent range. So hopefully you'll have the same experience that you would do traveling in most parts of the world. And we didn't want to have 1 or 2 stores here. We wanted to be able to put the scale behind the business. And to do that, you need to be priced right. So I think you're going to find it very competitive price. I don't think people are going to be disappointed with the way we're positioned.
Meanwhile, Arvind's retail portfolio has been growing at 33% and it's on the prowl to sign on other international brands. It's also been bitten by the e-commerce bug. In New Delhi, Nantara Rai.
Okay, so we all know where Nayantara is heading for her weekend shopping this time around. Am I right, Nayantara?
Maybe, maybe not.
Okay, on that note, we'll wind up this edition of India Business Hour. Thanks for being with us tonight. Have a great evening.